All right, guys. Today we're going to talk about keeping your trading plan simple. Keeping your trading simple. Not adding too much, not doing too much. Keeping your charts clean and just stuff like that. It might seem basic like with the simplicity and like keeping things simple and like you would think that's like something simple, but to be honest it's really not because like when you're trading, you really forget how with like let's say when people have like a lot of stuff on their chart like support and resistance and like a whole bunch of nonsense indicators and everything like that, it takes the focus out of the actual candles and like the movements of the candles and what they're doing. So I'm not telling you you gotta clean up your chart or anything like that. Do what works for you, but I'm just showing you a way to keep your trading simple and how to just clean up your chart so you can focus on what the markets are actually doing and you're not blinded by whatever it is that's all over your chart. Okay, so before we start, I'm gonna be doing one-on-one sessions with anyone who really wants to. You just gotta shoot me an email or go to the free group on the Telegram. Hit me up there. I'll be posting that in there too. Just let me know who wants to do a session. The sessions are primarily going to be on you. You're going to have to tell me what we're going to go over because it's basically your session and you're just asking for information on things you're stuck on, things you want a more explanation on, things you want to learn. You like anything. The sessions could be about anything: psychology, Wyckoff, smart money, imbalances. It all depends on you and what you want to learn and what you're stuck on. Okay, so just have an idea. If you're going to do a Zoom session, have an idea of what you want to go over. It doesn't have to be one topic. It could be a list of topics. Just know what you want to learn so you can get the best out of that session. Because I don't want to be going in a Zoom session and then going over um, stuff that you already know or stuff that you don't care about. So try to keep it like try to keep the sessions about smart money or Wyckoff or psychology, something in those lines. Don't come in the session talking about some like support and resistance or like a new strategy you have or something like that. That's really a waste of both of our times. So that's all I wanted to announce. um let's see. So yeah, I'll leave a link in the description for that, and let's get into this here. So before all of this was here, all I had did was this box. And basically, if you don't know already, all this POI means is point of interest. Basically what that means is this is an area where I'm waiting for the market to get into to look for a buy or to look for something to happen in this area. Okay. And point of interests are just simple, like it could be an order block, uh, a level of demand, Wyckoff or whatever. In this case, it's just an order block that was never mitigated here. Like this wick came down, but it never mitigated it. Okay, so this was my 8 hour point of interest, and this was basically the extreme of this whole push right here. I mean, yeah, we came down here, but this never tapped into this. If this would have tapped into this, then I would have looked for it to happen in here. And if I go back, I want to show you something. Why also this is a point of interest. Mainly when you're looking for a point of interest, try to see if there's a. Don't solely base it off of a, let's say, an order block, like just an order block by itself. Like, yeah, that could work, but that could also fail. To me, like if that was the case, it would have been a decisional point of interest for me. Like it would have been a point of interest, but like it's not something I would set a limit on. Like this, I would set a limit on if I wanted to, because I know that I'm gonna show you why I would set a limit on this in a minute. Go down to like the 15-minute. All right, look what happened here. This is a clear Wyckoff schematic here. Right here, heads and shoulders, or whatever you want to call it, but it's basically Wyckoff. And what happened here is this came in here, mitigated this schematic here, this accumulation of orders. We had a creek here. We had an explosion. We had a test here of this sell to buy, which also mitigated whatever it had to down here, and we exploded towards the upside. Okay, and as I was showing on the higher time frame, I believe it was like the 8 hour. If you look at this on a higher time frame, hold on. There it is. Look at it. You see? Sell. Sell to buy, basically an order block. If we we zoomed in, we can see, okay, let's piece all of this together and see why this is a level of demand and why was I looking at this area. First of all, we accumulated orders here. We accumulated orders here, which kept the market moving towards the upside. Okay, so we know we accumulated we accumulated orders right here. Okay. Then the market came down, created more liquidity here, making this creek. We had a sell to buy, which took the downside liquidity underneath these two wicks. People who was buying off of this accumulation mitigated the spring of this accumulation and immediately pushed to the upside, taking out whoever was selling here. So we know we have manipulation here. So we have like active signs of the banks and the institutions buying at this area. Okay, not to mention we filled imbalance. Okay, that's just extra. It's just this area had a lot of confirmation, and then we came down, we mitigated this area, we ran away from it. Okay, now at the time being, they didn't want to come and mitigate this here. All right, because they left this wick here as well. That was never mitigated. The market, see, they came down, but they didn't mitigate it. So I could actually mark this out for a point of interest. And I chose the 8 hour because the 8 hours just looked the cleanest. You can see the actual black candle here. This is your order block, not this candle here, the down candle to the downside. That's your order block here. So I'm not gonna get too deep into it, but let's remove these. But yeah, this is why this was my point of interest. Okay, so that was basically how, like, what type of confluences you could look at to find accurate areas of point of interest. Now, not every order block could be a point of interest. Now, you would ask me, why wasn't this a point of interest? It could be, but that's a decisional point of interest. You see, it gave a smart reaction inside of here, but is this area, does this area have the amount of confluences as this area has? You understand what I'm saying? Like, does this area here do you see accumulation of orders here? Did you see the sell to buy? Did you see it, like the amount of confluence that we had here versus here? Yeah, we had like a imbalance, but all of this was just a result to what happened here. Okay, so so that's like one of the things to keeping your trading simple. And the thing is, you would ask, okay, why didn't I look at the market anywhere here, like anything inside of here? Because I don't care what happens. I'm not looking to buy this until we come down here. All right. And this is just on like a higher time frame scale. We're going to go over like the intraday plays, but I wasn't looking for the market to do anything. Like, I wasn't looking for a buy here, for a buy there, for buy. You could have looked for a buy here to continue this uptrend here. Like, while you knew this market was going to continue to the upside based on like 1 hour. Let's go on the 1 hour real quick. With all this reaccumulations, you could have waited for the market to come down here and buy it. This would have been a good buy inside of this because the market just reaccumulated here. So you could have found a buy opportunity here to catch it going here. But mainly, when you set your points of interest, You're not looking for the market to buy anywhere else except here. And if the market did buy anywhere else, I just wouldn't have got into it unless it showed me like an accurate accumulation or like that signs that the market wants to like accumulate and buy orders there, then I wouldn't have looked at it. Okay. So I didn't focus on anything else here but here. And that saves you a lot of time. Okay. You don't know how much time that saves you. Knowing where you want to get in the market, that's key. That is very important. So always have your point of interest and don't worry about the market until it gets inside that point of interest. That's how you keep your trading simple. Follow your structure, mark out your point of interest, mark out your areas that you want to get into the market either for a buy or a sell, and wait for the market to get into that area and show you confirmation that it wants to buy from that area. All right. So after the market reacted inside of here, if I go down to lower time frame, and I'm gonna show you there was confirmation inside of here as well. Let me show you right now. Like this is literally how you get the sniper trades. All right, tell me what you see here. I don't even have to go like too deep into it. Wyckoff, just straight Wyckoff. That picture perfect Wyckoff accumulation that you're looking for right here. So if you would have waited for the market to get into your point of interest, let's say however long it took, and you just set an alert here, and once your alert went off, you just waited for confirmations like this. You see what? You see a selling climax. Automatic rally. You have a secondary test right here. You have a UA, ST, MB. You have your spring. You have a lower time frame break of structure here from the spring. So once you have that, once you see the market is showing signs of accumulation and you have your spring with the break of structure, you have no fear to take this trade. Why? Because A, you know that you're in a higher time frame point of interest on the 8-hour time frame. You know that in that area that you're buying right now on the higher time frame, there was other signs of accumulation. You know that this is a area where there's a lot of confirmation in it. That's why you're looking at it. So once you see the accumulation, you have no fear to buy this. Literally, there's no fear at all. You should buy it. Even if you lose the trade, so what? Buy it. The thing about this is, the thing about trading is, you're not trading based on if you're right or wrong. I'm gonna explain that. You're trading on the probability that you're gonna be right or wrong. Okay, so with smart money, the reason why smart money is so good and why it's like I think one of the best strategies is because it gives you a higher probability of being right. Because if you understand what the banks are doing, the probability of you winning that trade is higher than the probability of you losing that trade. So you're not always going to be right, but the probability, the percentage of you being right is higher than losing. And I'd rather take that than just taking a guess. Okay? So A, we know that we had accumulation on higher time frame here already. Now we're seeing a lower time frame accumulation. The only thing that will stop you from taking this trade is fear. All right? Do not let fear stop you from taking this trade. That's the only thing that could stop you from taking this. All right? So this is your test here. Immediately right here, once you get this break of structure, it doesn't matter. You could take a long position from this and have your stop loss underneath the spring. As long as your stop loss is underneath the spring, you're okay. All right? And let's say this ended up failing. So what? This is a big area. You can still wait for other until this area is completely broken. That's when the whole area is done. Until this whole area is completely broken, that's when it's done. Okay, let's say you lost and this area completely broken. So what? That means that the banks did not want to buy from there. That means they wanted to continue down. All right, we cannot predict or like say this is what's gonna happen. All we can do is anticipate and go off what the banks are doing. So if you see that the banks are showing signs of accumulation and accumulation of orders, why wouldn't you take this trade? Especially since it's already inside of a point of interest. Okay, it's just some thought process. I'm just like explaining like what like usual traders go through in this thought process and like with the fear and stuff like that. All right. So immediately after you get this spring and you get a break of structure, take this trade. Set a limit here, put your stop loss underneath the spring, and just hold it. Why would I say hold it? Well, one, you know you're in a lower time frame. Higher time frame point of interest on the higher time frame. So if you're in a higher time frame point of interest, you're gonna target a higher time frame goal, which would be like all the way up here. So I know this sounds crazy to some of y'all, but this is looking like it's a 58 to 1. If you would have held all this trade would have been a 58 to 1. And it gave you that too, by the way. So that's the key of keeping things simple. This is what keeping things simple, it helps you from taking a lot of losses. Okay, if you was just trying to buy this market from anywhere, you would have taken many losses just to get down here to catch this one win. All right, but rather you just focusing on this one win here, you avoid so much losses. All right, I'm not gonna talk about this a lot. We're gonna get to like the point of this. So yeah, this was a great trade right here that you could have taken if you would have just marked out and known that this 8 hour was still a very good area to buy off of, and if you would have seen the confluences. That's just an example. Of a buy that you could have taken right here at the bottom. This is a sniper trade right here. Okay. And there's many other buys you could have took too. We're gonna get into that. So as the market kept going up to the upside, all right, we accumulated here. We kept moving up. Now I didn't really start looking at this market because after this right here, I stopped looking at the market a lot until I just started see, because it was doing a lot of like mess inside of here, until I started seeing that it was making this 4 hour structure here. So what I seen was this low and this high. All right. Now the thing that I was looking at this 4 hour point of interest here, but this was a decisional point of interest right here. So making it being a decisional point of interest, I would need a sign of accumulation or some type of confirmation entry inside of here. I wouldn't just simply just take a buy limit out of this trade. Why? Because we have this is an area of demand. So this area is more likely to hold than this area, if you get what I'm saying. All right, but this time, we don't always go to the demand area. All right, we reacted off of here, so that's why I mark all of them out. I mark out both of my decisional and my confirmed points of interest because they could buy from either one. So if I go on lower time frame, we're gonna see what happened here too. Let's go like to the 5 minute something. Now this one was a different type of entry. Let me delete this. Actually, no, it wasn't. My bad. It actually wasn't. It's kind of like the same. Before I even say anything, it's the exact same thing. Like, it's literally the same thing over and over and over again. Accumulation. Accumulation. Again, same climax, automatic rally, secondary test, secondary since phase B. You have your spring, your break of structure here. This is an accumulation on the second time frames, and I don't have the second time frames, but you can clearly see that this is an accumulation on the second time frames. Because if you go on lower time frames, you'd clearly see it. All right, so this was your test. Here, you're looking at a 1 point. So I'd do 2 pips, but you're looking like a 1 point something pip stop loss here. If you didn't catch that, you have the last point of supply here. You're looking at a 1 point something pip stop loss too. You can put it at 2 pips if you want, but yep, there's an entry inside of here, and the market never came back. One thing I want you to take from this video and what I'm going through here is look how I'm not looking at every single buy and sell. How I'm not looking at every single like order block, every single structure, every single like imbalance, every single like whatever is here. I'm looking at specific areas. That's what I want you to do. That's how you keep your trading simple, is look at specific areas that you want to see the market react off from. As simple as that. Just keep it that simple, literally. Now, I know it might sound like a little difficult for you guys, but it takes practice. Just mark out your structure. That's the first step. You have to mark out your structure. You have to understand what structure you're doing and where the market's going. All right, and then you have to understand what areas caused the move. The reason I marked out this area here is because I know this was our last accumulation here before we broke the structure, and I know right here this is simple. This is just our demand that reacted off of a previous area. So I know, like, if we come back, we're gonna react off of here. Either we react off of here or we break structure. So it's a clear demand area, and this is just a decisional point of interest. And we ended up reacting off of the decisional point of interest too. So don't discount and don't discredit the decisional point of interests. You see how the market did not get into my point of interest here? I'm not going to take a buy here. Just because it was close enough, I don't care. I want it to trade inside of this area. Okay? I don't care if it was a pip off. I want it to trade inside of my point of interest. Why? Because this is where I'm looking for that buy. This area gives me the probability that my buy will be correct. Okay? That's why. Simply that's why. So now, either they're going to break structure. So the only way I'll change this point of interest is if they break structure here, and I'll look for a new point of interest. Until they break structure, showing me that they don't want to mitigate here, I'm waiting for them to come down here. As simple as that. So I don't care what they're doing inside of here, because all of this is just rubbish. All of this is nothing. There's no real moves going inside of here. You're not going to catch a real move. I mean, you could catch little scout moves if you want to, and yes, you could do that. But I don't want to get confused trying to catch all these little moves here. And that just gives you the probability for losses. All right. It's like the same thing with this. Like, yes, you can catch these retracements. And I was trying to catch one of these retracements because I knew that the market was going to come back down to mitigate either this area or down here. So, yes, you can catch after you see the break, after you see like the breaker structure towards the downside showing this retracement, and you see the structure. You can trade this retracement for sure. Okay? Don't get me wrong. But yeah, that's really all of it. Just keep the market simple. Keep your trading simple. Only look at areas that you know that the markets are going to show you a move at. Don't try to trade every trade. Don't try to take every order block or anything like that. This is going to help you a lot. Having points of interest helps you a lot, guys. Trust me. It helps you a lot from just not looking at the markets. Like literally, all you have to do is mark up a chart for like, let's say, like 30 minutes to an hour, mark up a chart or two, set areas that you want to look at, set some limits there, and all you gotta do now is wait. Just wait. If the market don't come to it, all right, then re-mark up the chart and set some new areas of interest that you want to get into the market. Just wait. It's that simple. All right, so that's pretty much it for now. Hope it wasn't too long. Hope you guys understood like the point of this video, where I was trying to get at. Don't forget about the one-on-one sessions. If you guys want more like explanation on what I was going through here, or like how I mark up these points of interest or whatever, just let me know. And peace.